I'm Anthony Smith, Senior Economist at Realtor.com, and this week we're looking at how the housing market is shifting into buyers' favor as the fall season unfolds. Let's start with the headline everyone's watching: mortgage rates. The Freddie Mac 30-year fixed rate just fell to 6.19%, its lowest level in more than a year. That's a meaningful drop, and it comes as markets fully price in another possible Federal Reserve rate cut. While this gives buyers some breathing room, it's worth noting that further declines may be limited. That's because there's still some uncertainty around a potential December policy move, and inflation expectations remain sticky. Turning to key economic data, after delays from the government shutdown, we finally got the highly anticipated updates for the Consumer Price Index. The Consumer Price Index, or the CPI, showed inflation running at 3% year over year, a slight increase compared to the 2.9% in the previous month. Meanwhile, core inflation, which strips out food and energy, also rose 3%. These numbers are critical for the Fed's next steps, and they'll heavily influence investor expectations for mortgage rates in the coming weeks. Shifting into the weekly housing trends, active inventories rose 15.1% year over year. That's the 102nd consecutive week of annual gains, bringing the total to just over 1.1 million homes on the market. New listings also ticked up 4.7% compared to last year, as more homeowners test conditions heading into the year end. And buyers are responding. Homes are spending only 4 days longer on the market compared to a year ago. That's the smallest gap we've seen in months, and median list prices are up 0.4% year over year. And for those looking to make a move, a few key takeaways stand out. Our recent report on mortgage rate determinants showed that shopping around for a lender remains to be the single biggest way to lower your rate. That's going to be potentially by 0.55 percentage points, saving more than $40,000 over a 30-year loan. Improving your credit score, especially moving from 660 to 720 and hitting that 20% down payment threshold, can also make a big difference. Even though that 20% can lower your mortgage rate, it's not necessarily something that everyone can do. According to our latest down payment report, the median down payment held steady at just over $30,000 in the third quarter. This is just shy of that 20% mark. Looking at the broader market performance, existing home sales rose 1.5% from August to a 4.06 million annual rate, marking the third straight year-over-year gain. The median sales price reached just over $415,000. Regionally, the Northeast and Midwest remained especially tight because of the limited new construction. Our collaborative report with the Wall Street Journal Fall 2025 Housing Market Ranking shows Manchester, Nashua, New Hampshire holding on to its top spot. Several Midwest metros continue to attract attention, with median prices between $240,000 and $400,000. And even within the luxury segment, we saw that value is leading the way. Detroit tops the housing market luxury list, offering more of the most accessible high-end housing with the 90th percentile listing price just over $720,000. Whether you're searching for attainable luxury or your first home, preparation is key. You can find all the details, including our full reports and all of our housing data, to download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates, and Instagram for graphics.